with all the actions on tariffs. Of course, we have a big day on April 2nd, but the Trump administration has certainly already made it known that they're going to put tariffs, levies on all kinds of autos and more. William Lee, chief economist, Milken Institute, is with us. Thank you, Bill Lee, for being here. Great to see you. You were listening to our last guest. Were you agreeing or disagreeing with a lot of what he was saying? I mean, what's on your mind this morning?
Well, Nicole, after hearing him and all these other pundits who are really saying the sky is falling, my advice to everyone out there is take a breath and just chill a little bit. And let's think about exactly what is going on. Tariffs are going on imports. Did you realize that imports are only 14% of GDP? So we're not talking about a large chunk of GDP here. And today, everything's about the autos and auto tariffs. Well, again, auto purchases are only about 3 or 4% of total consumer expenditures. So again, we're not talking about a big ticket item. It's much less than what we spend on housing, which is like 33%, much less than we spend on food or healthcare, 16% for healthcare. Food is like 13%. So we're not talking about big chunks of the economy right now. And I think the real source of excitement out there and concern for the market, and rightfully so, is what everyone's calling uncertainty. But it's not uncertainty about tariffs. It's uncertainty about whether President Trump is really going to be able to achieve the things that he promised, to reduce the size of government, reduce taxes, deregulate, and more importantly, for the near term, get foreign investors to invest in the United States, produce more stuff here so that we don't have to import as much. So he's trying to restructure the U.S. economy in a very short period of time. And I think the market's really nervous about whether or not he's going to be able to do that. So there, I think we really need to get some perspective on things and just chill out a bit.
I understand. Are you concerned about a recession? Are you concerned about the end of the year sort of being a time where the Fed will have to rush in and, cut emergency style?
Yeah, Nicole, everyone's talking about recession because the Atlanta Fed, which I also keep my eye on because I think they're one of the best around at getting a handle on where the data are pointing to for current GDP, that minus 1.8 number. But they put out a notice saying, hey, look, because of all the weirdness with gold and how they are unable in their model to separate gold imports from the rest of imports, they said if you try to do that, their estimate for first quarter GDP is about 0. So there isn't a recession really in the books right now, is even with the Atlanta Fed. And again, remember, why is it that the first quarter is weak? Because all this tariff talk has got people saying, hey, if I'm going to import stuff, I better import the stuff sooner rather than later. And so we have a surge of imports going on there right now in anticipation of future tariffs. So we have a mechanical weakening of GDP. If you look at what we call gross domestic expenditures, C plus I plus G, remember? Those numbers are hitting somewhere in the 2.5% range, which is well north of anything that's considered dangerous territory. So I don't think we are in a real slowdown right now. And insofar as there is a slowdown, it's in consumers. And your previous guest was very right to say 60% of consumers out there are really running hand to mouth. 80% of the consumption growth we've seen over the last several quarters has been financed by about 20% of the population, mainly like our viewers who have wealth in assets like stocks and real estate and pension funds. They're the ones who are able to draw down their savings and maintain a pretty strong level of consumption out there. But insofar as the aggregate consumption is concerned, it's still pumping away at about 2% or 2.5%. So it's really going in real terms at a fairly fast pace, and it's outpacing the growth of income. And that's where I think the danger is. Income growth just isn't catching up with where consumption is.
Understood. At this point now, what do you tell investors who may see volatility in the markets because of the tariffs, who may be worried about recession? You make the point about the autos being a small part of what people spend in their household over 1 year. But the big picture is maybe some people are concerned overall. What do you tell those folks who are investing and probably invested in the stock market?
Oh, absolutely. And as I am. And I think one of the things that I'm trying to do is saying, do I really believe President Trump is going to be able to achieve his objectives? And if I have some uncertainty about that, then the profits that I am anticipating with, the NVIDIAs of the world and the tech investments might actually be delayed more than was previously priced. So we are seeing the drawdown in markets right now, a repricing of when these future profits are going to show up. But so far, if you have any kind of confidence that we are going to be able to achieve the targets that President Trump is promising us, even some of it, I would say that right now, look around for bargains to buy and gobble up some of the things that you think are going to do well in a Trump economy, which is going to be investment-based, an economy that has lower taxes and less regulation.
Okay. And at this point now, when you think about what President Trump is doing ahead of midterm elections next year, do you think things may change the picture a little bit between now and next year, election time?
Very good, Nicole. That's exactly the point where I would be looking at. He's got between now and the time Congress starts to shift his focus on the midterm elections to get what he needs done, which is why he's rushing so much. If the bureaucracy of the government starts to slow him down and he is not able to get the reforms that he's promising, especially the tax cuts and deregulation that he still hasn't started yet, then I would worry. And you're absolutely right. The minute the midterm elections start, it's over. The momentum he's built up has got to carry him through the last 2 years, because after that, he really is lame duck. And no new policies will be put in place. So whatever is going to be done has to be done between now and the time Congress starts to shift its focus onto the midterms.
Okay. Any final quick thought? I mean, are we concerned about the dollar?
In fact, that was going to be my closing remarks, which is to say, if you're really scared about the effect of tariffs on the U.S. economy, check out what's happening to the dollar. Tariffs can change where it is that we buy stuff, right? It makes some stuff more expensive and other stuff less expensive relatively, because domestic stuff is going to be relatively less expensive now. So if we start to buy stuff at home and foreigners see that our prices at home are lower than they can find abroad, they're going to be buying more U.S. stuff, and that's going to strengthen the U.S. dollar. And I think if we keep our eye on the aggregate dollar and where that's going, that's a good indicator for where the overall health of the U.S. economy is.
Okay. William Lee, Bill Lee, Chief Economist over at Milken Institute. Thank you so much. It was great to see you today.
Thank you for having me, Nicole.